The South African Revenue Service, SARS, imposes administrative penalties on taxpayers for non-compliance with tax laws, regardless of whether the taxpayer is actively trading or not. These penalties are designed to encourage compliance and ensure that taxpayers meet their obligations. Below is an explanation of SARS administrative penalties for various tax types and how to avoid them. 1. Types of tax and associated penalties. SARS administers penalties for non-compliance across various tax types, including but not limited to A. Income tax, individuals and companies, penalties, failure to submit a tax return on time, under declaration of income, or incorrect information on returns. Examples: late submission of income tax returns, failure to declare all income sources. B. Value-added tax, penalties, late submission of VAT returns, late payment of VAT, or incorrect VAT calculations. Examples: missing the VAT filing deadline, under-declaring VAT liabilities, failing to register for VAT when turnover exceeds the threshold. C. Pay-as-you-earn payee penalties, late submission of EMP 201 returns, late payment of payee, or incorrect calculations. Examples: MP failing to submit monthly pay reconciliations, underpaying pay amounts due to SARS. Provisional tax, penalties, late submission of provisional tax returns, or underestimation of taxable income. Examples: missing the provisional tax deadlines, usually twice a year. Funti, underestimating taxable income leading to underpayment. EA customs and excise duties. Penalties: non-compliance with customs regulations such as incorrect declarations or failure to pay duties. Examples: incorrectly declaring goods for import-export, failing to pay customs duties on time. F. Other taxes, e.g. dividends tax, transfer duty. Penalties: late submission of returns or incorrect declarations. Examples: failing to declare dividends tax liabilities, incorrectly calculating transfer duty on property transactions. 2. How penalties are calculated. SARS uses a fixed penalty system for non-compliance, which is based on the taxpayer's taxable income or turnover. The penalties are structured as follows. Fixed amount penalties. These are based on the taxpayer's taxable income or turnover and are applied monthly until the non-compliance is resolved. Percentage-based penalties. These are applied as a percentage of the tax liability, e.g., 10% of the outstanding amount for late payment. Interest charges. SARS charges interest on overdue tax amounts calculated daily. 3. Avoiding SARS administrative penalties. To avoid penalties, taxpayers must ensure compliance with SARS requirements. Here are some key steps. A. Submit returns on time. Ensure all tax returns, income tax, VAT, payee, etc. are submitted by the due dates. Use SARS e-filing or the SARS Mobi app to stay updated on deadlines. B. Pay taxes on time. Pay all tax liabilities by the due dates to avoid interest and penalties. Use SARS e-filing or the SARS Mobi app to stay updated on deadlines. B. Pay taxes on time. Pay all tax liabilities by the due dates to avoid interest and penalties. Set up reminders or use SARS's payment arrangements if needed. C. Maintain accurate records. Keep detailed and accurate records of all financial transactions. Ensure all income, expenses, and deductions are correctly declared. D. Register for relevant taxes. Register for taxes, e.g. VAT, payee, as soon as you meet the requirements. Update your details with SARS if there are any changes, e.g. address, banking details. E. Seek professional help. Consult a tax practitioner or accountant to ensure compliance with complex tax laws. Use SARS's online resources or contact their call center for guidance. F. Respond to SARS notices. Respond promptly to any correspondence from SARS, including requests for additional information or audits. For important note, you don't have to be trading to incur. Even if you are not actively trading or generating income, you may still be required to submit tax returns or declarations. For example, individuals, if you earn income from investments, rental properties, or foreign sources, you must declare it. Companies, even dormant companies may need to submit annual returns to avoid penalties. Trustees must ensure compliance with tax obligations even if the trust is not generating income. 5. What to do if you incur penalties? If you receive a penalty from SARS. 1. Review the penalty notice. Check the reason for the penalty and ensure it is valid. 2. Rectify the issue, submit outstanding returns or pay overdue amounts. Request remission. If the penalty was due to exceptional circumstances, e.g., illness, natural disasters, You can request a remission in writing or appeal. If you believe the penalty is unjust, you can lodge an objection with SARS. SARS administrative penalties can be costly and stressful, but they are avoidable with proper planning and compliance. Even if you are not trading, you must meet your tax obligations to avoid penalties. Stay informed, keep accurate records, and seek professional advice when necessary to ensure compliance with SARS requirements.